But Ben, I want to jump on the most recent numbers coming out of the producer price index and the consumer price index, both looking at high, I guess higher than what would be preferred when looking at the level of inflation that we're seeing. So, between or from March to now, I think was a 3.4% year over year level on the consumer price index for inflation there. What is this signaling to you when it comes to maybe how the Fed might operate, looking forward, some of these signifiers, and moving forward on the general economy? How is this affecting agriculture?
Sure. You are right. We did see new inflation numbers last week. The year-over-year numbers were that 3.4%, which actually has shown some improvement in different sectors. And so we don't have, or we weren't seeing the strong reinflation signals that we saw like in March when it really kind of caused that pivot away from, you know, a dovish position in the Federal Reserve that we might see, three interest rate cuts here in 2024. March really kind of sparked the market that we might not see any interest rate cuts. Some of these consumer and producer price index levels still showing higher than desired inflation year over year numbers, but maybe starting to trend a little bit in the right direction again. That's introduced, or the expectation that we will see at least one rate cut in September of this year back into the market. I remain on the fence. I've often said, and you've heard me say it, I didn't think we would get a rate cut in 2024. I actually now would price in maybe a decent chance of one in September. But if we don't get one in September, I don't think we get one in 2024. To me, the edge still favors that we don't see a rate cut because the Federal Reserve would like to see these prices continue to make product and don't want to pivot too early and reintroduce that inflation that we kind of saw pop again in February and March. So the numbers started to head back in the right direction again here, but still more work to go.